Good evening. Friday, August 19th, 2022. The E-mini S&P 500 market profile day in review here. Let's start with the daily chart here. This is a regular trading hour session. The dotted blue lines are last week's high. You can see the vertical weeks mark off every 5 days. So Monday, Tuesday, Wednesday, Thursday, Friday. This is last week's high. This is last week's low. All week we've been popping above and can't really seem to stay above it. And this morning we opened with a gap down, and it seems kind of a foregone conclusion that we were going to move lower back down in somewhere into this trading range. Let's look at the scenarios we're looking at. Okay, so immediately coming in the morning, let me back this up here. So early in the morning, this low of the day here is at let's see here, 64. And when I came in to do the scenarios, we were down here. Okay, we were 20 points away. As we came into the open, we started to approach the low of the day, and opened right here at 59, where the red letter A is. So let's look at the scenarios here. We're looking at a gap down initially when I made this is over 10 points, but then it closed the gap quite a bit in the last half an hour in particular. But the first story was going to be a gap down to 10 points, and likely, or actually it was going to be more than 20 points. And the idea was to go with that trade, and we were looking for strongly negative market internals and building value where we were below the previous low day, and not closing that gap. So that's not exactly what happened immediately. The next story would be to close the gap from a greater than 10-point gap down, which gives us room to take some profits. Well, we actually had already, you could have gotten in that early before the market opened, but we opened up here at 59, and that's only 6 points away from or 5 points away from the low of the day. Still might be worth taking it. I would want to be on that earlier. I don't remember how it initially traded, but I do know that we did attempt to close the gap pretty early. So there was a move up here, but it didn't quite make it. It came back through the open, and then the idea probably would have been to be looking for shorts. So this next story, first of all, the gap down and going with the gap, that did not happen first. Okay, the next thing is to close the gap from 10 points or greater. That happened early, so that was a great idea, but it didn't kick in until it kicked in before the market opened, which is fine. Sometimes the volume picks up before the market opened, and you can catch some moves that way. But then let's look at this last one. Re-enter the range from 5 days back. The strategy would be to get on a trade to the other side of the range. There are a couple ways you get involved, and you'd want to enter the prior day's range. And I say prior day, not meaning yesterday, meaning the day I'm talking about. Okay, enter that prior day's range, build value, and market internal support direction. I will have to say that the market internals most certainly supported direction. They were heavily negative from the start. And on this particular trade, I left to go. I needed to take my car in. I was back here before the open. I had to deal with some of that. I had some issues with a pet, and I was not quite settled coming into the open, and I did okay to start with. But guess what? I planned my trades, but then I didn't trade my plan. Had I traded my plan, I would have a diametrically greater results today than what I ended up having, because my early gains, I gave them back and then some, because I kind of got faked out. And actually I'd heard somebody say something about Fridays being typical, having rallies, and I got faked out here. I was long when I really should have been getting short. Let me split this off here. Where's the split? Okay, this is A, B, and C. Let me make this a little bigger for you here. Okay. So initially, can't see it now, but if I could draw like an angle here, the B period made a poor low initially. Then it finally did break a little bit, but came back here, opened way up here in C period. we held like a reversal pattern for a long time, and this is a pivot point right here, this blue line, and the way it was trading, it really looked like this had a nice little angle here. It looked like we were gonna break back to the upside, and I kind of got hoping, wishing, and thinking, and we had all these single prints that could easily be taken back. We had all this overnight inventory that could have been taken back, and but I kind of got myself turned around, and that can happen. So this was kind of equivalent to a short covering rally that happens in fits and starts. This was like a long liquidation break. And what do I mean by fits and starts? Well, look at how C period broke the pioneering range here, the initial balance, not by much. Came back in, and then we opened in D. It also didn't take it by much. I mean, we did a lot of moving around here, and it just gave you the sense that they're running out of steam to the downside. Well, not so, Joe. They ended up breaking down, and I'd like to pull in. Let me see if I can pull in another chart here. Let's see here. Let's make it easier to see. This is the profile in 1, so it's a little easier to see things. I'm taking out the evening session so I can back up to the 5 days earlier day I was talking about, and we can get a good idea of what we're looking at here. So bear with me 1 second. This is why I'm doing this, in part, why I'm doing these videos, because to go back over the day and see how every one of your scenarios played out to one degree or another. For example, we did close the gap. Now, it happened earlier. We didn't close it entirely, but if you had anticipated that it was going to close, you would have taken a piece of that. And then a little bit later on, you had the opportunity to try to trade this move to the downside. So those both played. Now the gap down plus 10 points. The idea behind here. Now this actually did go. The gap continued, but not right away. It first attempted to close it, but this means, the way I write this out, and the idea is that basically it's a gap and go, meaning it's gapping down. There's not really much of an attempt to close the gap. It's going, gone, right? Possibly going to be a trend day. But if you look way back here, so let's come up to today. So this is today right here, okay? And again, actually now it's in 2s, okay? So this is in 1s. So I'm going to count back the days, all right? So this is Thursday, Wednesday, Tuesday, Monday, last Friday. Now last Friday, this is one of those days that is ripe for taking back some of the territory. See how it ground up, one-time framing? And we hadn't taken that back. But starting on the open, we came down and took out this low here, and it was all about pushing and grinding down. Now initially it was pretty there was heavy selling, and pretty I wouldn't say dramatic, but it was pretty persistent, right? And then you can see in the B period here. Notice how B period was for a little while there. It was even an inside bar. So it was very small range relative to the A period, and C also was looking at the same thing. And it really felt like, okay, so this is our, and if you look at the volume here at the time, it was a B shape. So this is looking like long liquidation, and that the trend might resume to the upside, or we're going to push back, get a retracement of some kind that we could get in on. So when we come down here, we came down to this value area low, which is the bottom of the gray period here. Then you have these swing lows of these periods. Now this is where, and one of the first places looking to stop was this initial balance high from back then, where it becomes 3 wide, because this is where we saw the initiating activity to the upside, which resulted in a trend day up, okay? And this was all being taken back. So anybody that got long here, if were still in that position, they're now underwater, right? And the selling, they're liquidating positions, and to get out of a buy, you have to have a sell order, right? So you got new selling, and you got old people getting out of position. So squeezing them down. Anyhow, the point is there were some stopping points along the way. You had this volume point in control area right here. You had the low of the D period at the bottom of the value area here. You had this whole little volume profile. There was a ledge or an edge there. You know, you've got it 3, 4, 5, 6 wide here, and then it tapers down. And you were looking for we were looking for it to get to the other end of the range. Well, notice how, like I like to say in the ES, that a lot of games get played, whether they're consciously controlled games, I don't know. It's just the way the market dynamics play out. But look how we came all the way down here, and now you're thinking, okay, we're one time framing down. We're going to go to the bottom of this range as I don't want to say predicted, because I have no idea what's going to happen, but as planned. So re-entering the range 5 days back. Now let me count this, because this is what I meant this day. Maybe it's 6 days back. Let's see here. 1, 2, 3, 4, 5. No, 5 days back is right. So 5 days back. Starting with counting yesterday 1, 2, 3, 4, 5. Okay, the idea was to get to the bottom of this range. Well, notice this: we came to the tick. Isn't that amazing? Now, you know, we could be looking at coming to, you know, continuing this move on Monday. I don't know. That would fit some of the balance behavior. You know, we go outside of a trading range and fall back in. Typically, the market's going to balance back to the other side of that trading range. And we'll see what happens. My guess is, if that is the case, it'll probably all be done in the overnight, and we'll have a gap down again. We'll see what happens on Monday. But anyway, what's talking about games is we came down in D period right to where it's too wide here. Now remember, this is in ones, so if we look at it on the well, now it's in half. Okay, let's look at it on this chart here. I'm going to take the evening session out again. Bear with me. Lately, this has been taking a little while for things to load, so I need to do some maintenance on this. One moment. See, what's a poor low in the ones does not necessarily look like a poor low when you have it to the tick. All right, let's see here. And I don't have my overnight high and low levels on this chart, I think, correct. No, I do not. So don't pay attention to those. All right, so let's make it a little bigger so we can see here. All right, so now it's in quarters, but we don't need it that granular. Came down in D period, and it came within one tick of the B period, where it's too wide, right here. Okay, split that out. And then reversed. So we reversed, and now for 2 hours, it looks like we're going to be ripping to the upside. How about that? People going to get long. They're getting long, and then slammed all the way back down in continuation, further down, right one tick below this low. How about that? It went down here, one tick, and then back on up. And the plan was to get short and trade to the other side of the range. But yours truly threw his plans out the window and got long, and then kept trying to call a bottom for a bit. So there you go. If you're watching these videos and it makes it sound like I'm only having great trading, that would be an illusion, and certainly not one I'm casting. So there you go. I fell prey to this in part because coming into the open, I'd been disrupted my normal routine. I had some problems arise, the automobile with a pet I'm trying to take care of, and putting out those fires and things like that. Coming into the market slightly discombobulated. You know, it's very, very interesting. This is particularly true for trading early. Now, I did okay initially as far as my results. I wouldn't say they were the best trades, but I ended up where I could have walked away for a while, and I thought to do so. But I thought, no, that's kind of a paltry morning. I can do a little better and then quit. Well, guess what? You know, turned it into a disaster, and actually, you know, kind of made some of my week a waste of time, because it not just took back today's gains, it took back some of my prior gains. So that's how deceptive this kind of thing can be, because I'll tell you what, when you do find the place where it's going to reverse, you get some genuinely great moves to the upside, in this case, and it could be the other way to the downside if it was going the other way. And you know what? It's the market can always go, well, what's it said? It has the capacity to remain irrational longer than you have the capacity or resources to remain solvent. Meaning that this thing can keep pressing to where you finally just give up the ghost, and maybe it goes one more tick and then turns around and goes your direction. I mean, that's just how it is. That's trading. That's been my experience over the years, and it's something to realize that it's better just to cut your losses short and try again later versus trying to get that trade to work out, or keep going after the same losing trade when you realize you're offsides. You are going against the grain. The market internals, another thing that was deceptive was they were heavily negative to start, but they kept coming off. So that's almost like an up move. So they were moving, they were going more positive. They were still negative, very negative, but they were coming off quite steadily. Not dramatically, but they were definitely in a more moving towards a positive slope. And we have the capacity to interpret information, market generated information or otherwise, to get confirmation bias. So I was interpreting that as that I was on the right side, that I was getting ahead of the move. I was an innovator. I was right where it's going to turn. And you know what? There was a little voice inside of me that's telling me that I was playing that crazy game again, and I still didn't listen to it. And I came into the market mostly prepared, but I didn't prepare my mind again. I didn't get completely reset before I sat down, and that means that I was not settled, focused, have all my ducks in a row, have all my resolve, have my mental fortitude, my resolve that okay, I'm going to take a loss. I'm going to quickly realize if I'm wrong and get right. And I did not do that. I failed to do that. So there you go. All right, that's less about that's more about trading psychology than it's about the market auction process. But here we came into this range here and built value, right? So way down here, we're back in this range. Look where we opened. Okay, way up here. All right. And I said that if market internals supported it. Now we traded fairly quickly. Where you have this thin volume, generally the market's moving very quickly. Market moved quickly down here, and then as soon as we got into this area 44, okay, we started to build value. And let me pull these profiles together and have a look at this. So you can see right where the volume bumps out is where this concave area is. And the markets do tend to kind of backfill these areas. And that's exactly what was happening, and therefore we were building value. And as we built value, the market internals were negative. It's somewhere in here, or if I or anyone had the sense to get short, even breaking the opening range, or maybe getting short any kind of a bump up against this low, to get short and try the plan. The plan was if we enter this range over here, we are going to, let me split this off again. If we entered this range, our plan is to journey to the other side of this range. And sure enough, that's what happened. Exactly. How did I know it was going to do that? I had no idea it was going to do that. I can tell you this, I certainly, even though I talk about games that I see and familiar with, I certainly didn't know it would do this. So this is probably, if I had been smart enough to follow my plan and get short and take it all the way down here over 2 hours, I probably would have lost a lot. I probably would have lost a lot coming back and then realize, okay, I got to get out, versus trying to think it's coming here and going to continue down there. As soon as it stopped one-time framing, that would be a change. But look, some other people could have let it come all the way back up here, So this would have been to realize when there's a change, maybe we ought to get out and re-enter, but I don't know how I would have gotten short again way up here, what indications I would have had, or what to trade against. I couldn't answer that to follow this move down. But at this point, if I've been prepping all morning, trading for 4 hours and it comes back up against me, I don't think I'm ready. I don't think I'm gonna have the stamina to take a short here and hang on there for 3 more hours to come down here. I'd rather take a lot of small bites that would add up to that kind of a range of points, you know, capture these little small moves. Hey, I would love to take a trade way up here. Let's see, way up here, and be short all day long. Hold it until 4 o'clock p.m. Well, that's just not my style. I certainly don't want to be looking at the chart for 6.5 hours straight. I had my years when I used to do that. That's not for me. That's not why I got into trading. Not to sit here and just trade all day long. I love trading, but there's a lot of other things I'd rather be doing, and the longer you sit here and stare at it, the more shapes the clouds will take. The more you think you're seeing something that's not there. The more you start to get cognitive biases and things like that, because fatigue sets in, emotions set in, and I'll tell you what, that's one of the great things about trading is the challenge of it, of mastering your emotions and all that. So, all right, well, that's enough for today. That's what played out, and that was the plan. And unfortunately, I did not follow my own plan, and it cost me. So I need to have more confidence that, you know, every day I've been showing these plans. It's like, oh, those are really good, and they work out. You know, they just take time. And one of the things too in trading, and I'm no expert in this, is like you have this sense of immediacy that things need to happen right away. That they're going to happen like this, A, B, C, just bang, bang, bang. Well, it often is not like that at all. It don't really happen that way at all, to quote The Who. So, all right. Make a great evening and have a great weekend. If you like the video, please hit like so I know somebody watched it. That's helpful to me. Thank you very much, and hopefully we'll see you on Monday. Bye.